Did you know that one of the best benefits of being a homeowner is that you get a reduction in the federal income tax that you pay? This video is going to go over the basics so you can understand how homeownership benefits you. I'm Jennifer Hernandez, lender for almost 3 decades, real facts, no BS, everything mortgage here on my channel, Loan with Jen. Thanks for tuning in. Now, I do want to give a disclaimer. This is not tax advice. It's just from accumulation of years of experience of actually doing mortgage loans. So you definitely want to get with your tax professional on how this could specifically impact you. So we're talking about income tax savings for being a homeowner. So the first definition that we've got to have when you're taking this mortgage tax deduction is that it is for a home. Now the IRS, conveniently enough, I've got it here for you, the IRS actually defines a home as having these 3 characteristics: a place to sleep, a place to cook, and it has a toilet. Like, I'm not joking, guys. This is literally written in the guidelines of the IRS. So if you meet that first criteria, it's considered a home, whether it's a condo, it's a house, it could be a shack. If it's got these qualities, then you're in good luck. The second thing that needs to be evident is that it's got to be you have to actually have a loan in place. So a loan could be an institutional loan. That's the Fannie Mae, Freddie Mac, FHA loan that people get. It could also be a home equity loan. It could be a home equity line of credit, or it could be a construction loan. So that's mortgage interest that you would pay. And also, if you have a loan with a private individual or a private company, as long as they give you a 1098 form, that's an IRS form 1098 with interest that you pay, then you are able to deduct that on your taxes. So the third requirement is that this is your primary residence where you live. So a primary residence is defined as your main place of residence. Where you reside, where you live with your kids or your family or your dog, it is your primary residence. You can only have one primary residence in order to qualify for this. So in general, you can deduct mortgage interest that you pay up to $750,000. So there are limits from the IRS. Again, this is not tax advice. Yearly, these amounts do have potential to change from administration to administration. So currently in 2023, $750,000 is the max amount of the price of the loan, actually, that someone could deduct the interest if you purchase the home in this year. Now, the next thing that you can deduct is actually property taxes. So currently, the property tax deduction is limited to up to not exceeding $10,000. So that is the max that you could deduct. So here is an example of how you save. So let's say that your income is $80,000 from all sources. Approximate tax on that $80,000, I looked it up, I just did some Google, is about 22%. Remember, this is not tax advice. Your actual tax rate might be higher or lower depending on your situation. But in this example, we're going to take 22%. So let's say now that your mortgage interest, let's say you have a $300,000 mortgage and your mortgage interest that you pay is roughly $18,000. Now, in addition to that, you pay $6,000 in property tax. So if you take $18,000 plus $6,000, your total potential deduction is $24,000. So let's do some more math. So stay with me. Your income is $80,000 minus the deductions of mortgage interest and property tax of $24,000. So that diminishes your actual net taxable income to $56,000. So I'm going to continue the math here so that we can calculate the savings. If you had no deductions and you paid full tax on your $80,000, in this example of 22%, remember, I'm not a tax authority, so you want to double check for you, but 22%, that tax is actually $19,200. On the other side, if you take those deductions and you have the mortgage and property tax deduction, and your income is diluted to $56,000 and you times that by 22%, your tax payable is $12,320. So when you take the difference from the $19,000 to the $13,000, that's $6,880. That is real money that you are saving on your federal income tax return. If you further divide that by 12 to just be like, gosh, Jennifer, how much is that monthly? Take the $6,880, divide it by 12, and you get $573 per month, essentially, that would equate to as savings. Not to mention, there's other reasons why real estate is the best investment. In fact, I've got this video for you here, why real estate is the best investment. Enjoy. Thanks for watching. Talk to you soon.